So welcome to the live chat this evening. Really glad to have everybody with the group here. I just want to start off by thanking everyone for the loyalty to the channel over the last couple months, specifically. Been through a big relocation, but I'm kind of back, and I'm kind of putting myself into a self-induced YouTube spree here. If you guys didn't notice, kind of changed the pace a little bit. I figured if some of the other channels could do it, so could I, and why not? Really try to be cognizant of the information that we're putting out there for folks, making sure that the information that we're putting out there is usable. Okay, I've said many times, this YouTube channel isn't something that is built for, for my individual success. I'm already successful. Okay. A couple of years ago came up with the idea to share some of the fundamental things that I had uncovered in investing and things that I had evolved to learn, and identified in a lot of people that they just didn't really know a lot of these fundamental benefits, and figured I'd come out with the YouTube channel. Didn't really know where it was going to go when I started it. Didn't really care, to be honest with you. What I care about now is that I've got a very interesting, measurable base of folks that come in and want to support the message. So for you guys that are coming in on a Friday evening, I just kind of want to welcome you to the group a little bit. I want to thank everybody for their support. I've kind of got the new set up a little bit. This is going to be a little bit better setting for the live feed this evening. So thank you for that. Kind of testing out a new setting this evening. But I'm going to let the group get in here for another couple minutes or so before we kind of kick it off, and I can start to open up the dialogue with the group. I see some of the channel creators in the group already. Lydia's in here, who's the YouTube making machine, no doubt. I don't know how you do it, but it's a lot of work to put a YouTube video on there of 5 or 10 minutes, man. It really is. And I'd like there to be some substance to the videos too. So, it's difficult, doing daily live feeds. I certainly do have a lot of topics to push out there, but we're going to start to up the frequency a little bit coming into the holiday season. For obvious reasons there. You guys kind of know my feeling on that. I just think a lot of people are a little bit more available and wanting to take advantage of some downtime, catch up on some of their favorite YouTube channels. That's cool. And the channel's open to anybody. But welcome to you, Lydia. It's good to have you in the group there. I see a bunch of folks coming into the group now. I'm going to go ahead and kick it off. I did have a really good question there at the very top, and I'd like to start with that. It was Brenny Felice who kind of opened up the door. I mean, it kind of touched on why it is that we invest. Obviously, if you can start your investing now and not really understand where it could lead to in the future, that's kind of a given. But what Brenny was asking is, if you invested in the S&P 500, for the foreseeable future until you reach retirement age, what would be a strategy that you could use to maybe switch to the dividend payer VYM, which is another ETF, which is an interesting strategy. My response is going to be a little bit more detailed than that on how to maybe reach that goal. My particular thought on it is to enjoy single stock ownership for the most part in a portfolio. I just think a lot of the times, a lot of people, when they start investing, myself included, I was scared to death of owning single stock. And, this week for a short amount of time was validation enough to be scared, I guess, of single stock ownership. Now, it didn't scare me a bit. I don't put money to risk that I'm not willing to lose. And that's a lot of what I try to talk to people, is really make sure before you make the move that you're not doing it on blind faith. But I think an interesting response to Brenny is to own enough S&P 500 exposure to give you the diversification in the portfolio. But I always refer to my S&P accounts as being kind of the barometer in my portfolio. You know, because the markets are going to go up and the markets are going to go down. Okay, and it's kind of it's a real passive way of investing. So for folks that are just getting started in the stock market, it's a great way to get that exposure, diversified exposure right away. You know, you've got exposure to over 500 companies right away, and that's kind of what you're buying. But I really don't want to underpin or undertone the importance of owning single stock. And I'm not talking about speculative stock here. I'm talking about being a participant in Johnson & Johnson, Merck, Pfizer, you know, JP Morgan. I mean, I didn't even see the earnings call today. Evidently, it was bad. It went down. I was not expecting that. Citigroup reported. Citigroup went up. But have some exposure across the sectors, full well knowing that you're not going to reach full diversification, right? But I think that's probably the best path to achieving wealth. Now, whether or not you're going to be able to turn off the dividend reinvestment portion and live off of the dividends someday, that's not something that I'm going to sit across from an audience and say that's possible. Is it possible? Yes. Is it going to happen for certain? I don't talk like that. I don't speak in definitives in the stock market. Here's one thing that is for certain. If you don't do it, it won't happen. So chances are you'll probably put some sort of a program in place and realize in some form or fashion, some form of your overall goals that you really couldn't plan for in the future, but would have never been possible had you not put a plan in place at the same time. So I just thought that was a really cool question. Thinking along the right lines of how you want your portfolio to pay you back someday, because ultimately that's what we're looking to build up. And it's hard to really think about that when you first start and you only own a couple shares of the VOO. Maybe you own a couple single stocks. Maybe you're up around $10,000, or you know, just starting and you've got a $5,000 position, or maybe you took advantage of the drop in the stock market this week and you're looking to get a starting position going. You know, you could do that, but it's really kind of hard to imagine your portfolio being multiple hundreds of thousands of dollars down the line. But, you know, that's it's really the singular reason why we invest here. It's all about money and accumulating wealth. And it's one of the very, very few avenues that I know of to actually wealth build in this world. It's one of the few. So I thought it was a really good comment. I'm going to kind of skim down here. I've got Officer Towers on the line, man, long standing supporter of the channel. Really appreciate your guys' time. I got Doug Whitaker in the line here, is really pulsed into the stock market, and I respect his opinion on what he's got. K97 is also in the group here, also very, very respected in the group. And both of those guys are calling for bumps next week as well. Some continued volatility in the stock market. If I were going to go with my gut feeling, I would disagree with that. I really do. I think the stock market is on fire right now. I think it's fabulous. I think had 2 years ago, I think if you had said 4.2% GDP growth in this market, I think you would have been laughed out of any conference that you would have ever said that to, or any group, if you know, because we got so used to such very, very anemic growth for a long, long time. And here we are up over 4% GDP. That's amazing for a powerhouse economy like ours. If nothing else, it's providing some buying opportunity in some of those single stock. So it may be one of those times where you can look at the cornerstones that you've kind of had earmarked in your watch lists. So this is just one of those things, right? You can build out that watch list for free, have those picks ready and available, you know, in the wings. I know BlackRock took a huge leg down, and you would have got a good opportunity to buy BlackRock. Blackstone gave you a good entry as well. So some of those cornerstones in the portfolio, you may have had an interesting time. I had no time to buy this week, actually. We kind of had a quasi storm roll through last night. It was actually pretty aggressive here in the Virginia area. So trees leaning over, and it was pretty violent. But anyway, I'm gonna scroll down here through the list. My response to these guys talking about their thoughts on the stock market next week, I would prepare you guys for more volatility. Certainly, my opinion, which is all it is is I think actually we're going to have a few up days next week as well, with some added volatility to the stock market. I think stocks like Amazon are going to be plucked up by some of the larger hedge funds, and that's going to drive up some of those stock prices. I think I actually considered doubling down on Amazon today. I would have done it had I had the opportunity. I just didn't. But certainly to go through here, I'm going to check and see who else is in the group here. Try to adjust. I got Wild Week. Took profits on Monday, but added a small position in CRM Salesforce and Take-Two Interactive. I see a bumpy road ahead, but just had to take a nibble. I think that's smart. I think CRM has not provided a buying opportunity. I unfortunately had to buy the stock when I had to buy the stock and bought it in the 150s. Of course, I owned it in the 80s and sold it, as it approached 100 for a profit, and now just took a bite back out of it. I wish I would have just held it, but I didn't. But I think you got some good entry points on some stock there, so good move on that. Was happy they solved the border crossing thing. I have been off the news this week. I have been locked in on work this week, so it's been pretty crazy for me. I have been off the I don't know what's going on in the world, to be honest with you. I guess I should, but I don't. I've been really locked in. But there's love for consumer staples any longer. There's no love for consumer staples. I think that's fairly short-term view. You got to have staples in your portfolio. General Mills is going up, and you're right. These stocks have really been beat down. Just like a couple months ago, telecom couldn't win, and now they're almost in favor. You guys saw the restructuring of the telecommunications services sector. Now you've got companies like Google now taking up a portion of that particular sector. They're no longer part of the technology sector. So I will be adjusting my sector allocation. I think you probably need more than 3% out of the telecom, or I may do a sub-split within that sector and keep traditional companies like an AT&T, Vodafone, Verizon, China Mobile, really the cell phone carrier types, away from some of the other media like Facebook, Google, some of the other ones that take up that telecommunications sector now. So Eric R., well, I reloaded YouTube at the perfect time. Eric R., good to have you on, man. I've got Jersey Philippek on the line here. Very cool, really cool group here, man. And I want to thank you guys for joining in on a Friday. For you guys that are somewhat new to the group, if there's anybody out of this this group that's joining the Independent Investor channel for the first time, I'd like to kind of just go over some of my goals on the channel. I've got them written on the whiteboard here. I took the whiteboard out of service there for a while when I was up in New York. I was afraid I was going to get sued for using a whiteboard because I wasn't sure if there was somebody else that had a monopoly over the whiteboard. So, but I've since got over that, and I've brought the whiteboard back. I think it helps demonstrate some of the points I drive home on some of my YouTube videos, and I just like doing it. So I brought it back. So hopefully I don't get sued. But I want to talk about, the first goal that we talk about, and this is a really prudent time to talk about how we want to make everyone an investor. But I have in parentheses the word scale, and that's really, really important. If you're one of those investors out there and you're brand new and you're going to college and maybe you're making just a couple $1,000s a year while you're going to college, there's still no excuse as to why you can't start a retirement account for yourself. Start the account. Every dime that you put in there, is going to be one dime that goes toward your future. And that's honestly how I think. And I got that mentality from the old school. My grandfather, he's not around anymore, but he said you gotta pay your time into the system, and you gotta pay your money into the system. Every dime that you put away is going to have the chance to accumulate in growth. But I think when I talk about scale, I really mean that to mean that I don't want to discriminate from anybody. I don't care what income class you come from. I don't care what color your skin is. I don't care what country you come from. Now some of the countries out there that tune into the Independent Investor channel, they don't have quite the options that we have here in the US. They differ. Okay, right, wrong, or indifferent, they're just different. But I want to make sure that everybody understands that I want to encourage everyone to think of themselves as a potential candidate to become an investor in the stock market. It's very, very important. A lot of people have a hard time looking in the mirror and imagining themselves, in a position of greater wealth down the line. And I don't believe in telling the future. I don't. But I do believe in taking prudent steps toward your future, and you can do it with scale. And I think a lot of people watch, how to invest $1,000 videos, and it may be the only $1,000 that they have. So they go and they subject all that $1,000 to the stock market. And I think that can be kind of a rude awakening, because had you done that on Monday with $1,000, where would you be right now? You'd be down $200. And for somebody who's taken the time to build up that $1,000 and then invest in the stock market, only to see a haircut, of $200 or $100, whatever it is lost in the stock market. If you're succumbing to losses right away in the stock market, it can really turn you off right away. And that's why I advocate for scale so much. I'd rather see somebody start the account with $250 and go ahead and allocate $20 every 2 weeks out of that, smaller paycheck. Once you get that career started, then you can look to up the ante a little bit and contribute a little bit more, take a little bit more advantage of dollar cost averaging, maybe some strategic buying in the account. But I don't discriminate against anybody, man. There's nobody out there that I think is exempt. I think people who are actually some of the worst investors think they're the best investors, and vice versa. Some of the folks that are the salt of the earth, hardest working people, some of those folks can actually be some of the very best investors, and actually get a heck of a lot more out of the stock market. I think there's a lot of people out there that are involved with financial planners who would never, ever even entertain a message like mine that advocates for going on your own. Because my thing is, I think people who are making a salary of $20,000 a year, they need every strategic advantage they can get. And they need my information. They need it. And when you've got me talking about my number one goal is to define scale for people and let people know that it's okay to not have a lot of money, but to start in the stock market, and that validation that a lot of people need to know that they're starting correctly. Now that's worth its weight in gold. That's a very, very important goal of the channel. And I hope it comes through to some of the new investors if anybody's in the group here for the first time. The scale, very important. And the earlier you can start, the better. Start to exercise some of those principles. I understand, even if you were that investor that lost a little bit of money this week, the inherent lessons that you'll take out of that are priceless. They really are. And I don't want to get too deep into the psychology of the stock market, but I see people all the time, man, that they get stressed. I had a comment on my video this week about appearing stressed, and a few people agreed with me. I'm just very intense person. I've always been that way. And he said, don't go box to relieve some of the stress that you have based on the market. And I think the point was missed, in that I enjoy what I do when I'm away from, looking at the stock market. I enjoy watching the stock market, even when it's doing what it's doing this week. I'm just kind of a dork that way. You know what I mean? But I enjoy all the activities I do. I don't do it as a remedy, I don't do it as an escape. I do it because I actually enjoy doing it. So I thought that was kind of interesting. Before I get to goal number 2, I'm going to kind of check over here and make sure that I'm hitting all the questions. I know there's a good mix of folks in here. Again, this thing is jumping around here. The Google needs to fix this on YouTube. So hopefully I can keep my spot here. So how's everyone feeling about next week? Market going up, down, big, or pretty much staying stagnant? I mean, that's a good one. I'll say it's either going to go up or it's going to go down. I'll say that. I tend to I like to stoke the fire of getting people into the habit of understanding that they'll never know. When you think you know, and you say for definitive that it's going to go down, and it'll go up. And you'll kind of get used to not being able to project where the stock market goes at any one given time. And you just kind of give up, to be honest with you. Focus in on those things that you can control. And that was another kind of theme that I was trying to push out in the videos and the uploads that I pushed out this week. So I've got, I don't miss California. I miss California. I like California. It's awesome. I got Rohan on the line here. He says, Ryan, what's your take on investing in VYM versus individual dividend stocks like Procter & Gamble, Pepsi, etc.? I think VYM is really good. If you notice there, I think it's just over about 100 holdings. Correct me if I'm wrong. I don't have the Vanguard page pulled up tonight. I think it's a great ETF. It really is. You can win with it. You know, I just think you can really spread out your dividend exposure across a lot of different sectors, and you know, set each of those up for dividend reinvestment. That's what I do. I think you can win with both of those programs. I really do. I think if you're more of a passive investor, I think you could probably go more with the VYM. But if you can accept a little bit more risk in your portfolio, I think you could probably get a little more capital appreciation from owning single stocks, you know, more of the blue chip single stock variety. I'm not saying go 100% stock in the portfolio, but certainly a 50-50 blend is worth starting at. I'm about a 25-75, so 25% of my portfolio is passive. The other 75%, which is a pretty sizable amount, is devoted to my single stock, the majority of that being a portfolio of dividend payers. You guys know that. And then the remaining being some growth stuff in the portfolio. I don't think there's any right or wrong answer to that. I just think it needs to fit in the right portfolio. Make sure you're not spread out all over the place, and making sure that if you're going to invest either passively or actively, which is what I consider that, you know, passive being on the ETF side, active being on the single stock side, that you've got the risk tolerance that's appropriate to hold either one of those holdings, because they're still, at the end of the day, stock holdings. Yeah, it's a good question, Rohan. I really appreciate that. That's good. Did you add to your V position? Man, I was tempted. I'm about to kill this fly that just made its way into my live feed. You see that? That's amazing. I'm about to kill it. You guys are going to see this on live feed. It's going to be amazing. That's pretty funny. Yeah, this week would have been the time. I bought it at the absolute wrong time. Kill that fly. Yeah, it was amazing to me. I watched Visa go up for, you know, months and months and months and months, and I've owned it before. I owned it a few years back when it ran up above 100 and split. I got double the shares out of it, and I had 52 shares of it. Ran all the way up into the 80s, and I ended up selling it. I should have just held it, because now I would be sitting on a doubler. And that's actually one of those lessons that I talk about all the time, with the power of owning a single stock like a Visa. You know, I mean, every good single blue chip stock out there, like Microsoft. I remember when it traded, you know, in the 40s, you know, in the 30s, and here it is way over 100. And it's like you would have been up 300% had you just held it, you know, and that's within the last 10 years. So you got to kind of imagine and think long term on some of these, you know, really good blue chip companies that, you know, have been around forever, and just look at their 5-year rates of return. It's really interesting to look at some of those really good blue chips and how well they've performed over the last, you know, 5 years. Do a 5-year rate of return on some of those good blue chips companies. It's amazing. It really is. If you had just bought them and held them. To answer your question, I'm actually holding my position in Visa. It's a company that I wanted to own for a long, long time, and I'm happy to own the stock. That's awesome. I should get a tip for that. Killing the fly. That's awesome. So I hope that answers your question. I didn't add to it. I'm pretty happy with all my positions right now, other than the fact that they're all going down. Um, I mean, I've got a great portfolio. It's just not quite working this week, especially, and probably picked the wrong time to buy big growth tech. Obviously, it was just a poor move, just a miscalculated move on my part. But you know, Amazon really looks attractive right here, no doubt. I was actually considering doubling down on Amazon, but I didn't make any stock buys over the last couple weeks, 0 stock buys. So this is what I'm doing. I've taken the opportunity to sell off the table, one of my defensive strategies. And if I tell myself that it's not available to me, then it's not available. It's not an option. I either have the option to hold or buy more stock. And those are the only 2 options that are on the table right now in my portfolio as I wait for, you know, the volatility to kind of come down a little bit. So my investment journey, if you're in traffic, so you guys are talking, just scour through here and try to find some more questions for you guys. Do you have a favorite small cap? Mine are ticker AAXON and Boson. Yeah, if I was going to get small cap exposure, which I do, part of my passive portfolio, the 25% that I talked about with you guys, has a section of that that's already devoted to a small cap index fund. So for you guys that are looking for small cap exposure, I always recommend the VB. It's returned close to 10%. It's the Vanguard small cap ETF. It's really paid back shareholders well. And I do recommend that everybody have some small cap exposure. If you don't go with the VTI and the total market, if you go with the S&P, you're probably going to want to add some small cap exposure to a passive portfolio. So you have to have the more you say and the earlier you get, start the better. Agreed. I was happy as hell that I bought 450 shares of NIO at $5.95. And after Tesla investor, Bali Gifford took an 11.4% stake. Nice. Doug's always killing it in the stock market, man. I love it. It's awesome. I've got my good friend Jared Odell in the line, man. He says, good evening, Ryan. A wild ride in the market this week. It was interestingly enough, I was so preoccupied. I really didn't have a lot of time to check it out. Honestly, whenever the stock market does this, I turn it off. I'm not one of those guys that wants to profess that it's non-emotional for me. Okay. I've just been through it before, and I know mentally the right thing to do. And I'll put myself through the ringer to adhere to sound investing principles. And I know what those are. I will not act irrationally in the stock market. That doesn't mean that I don't have to like looking at the stock market go down 800 points in a day. I think that's absurd. And just to talk on the interest rate side of the house, I'm not really sure I understand why our economy is so weak that we can't subject it to normalizing interest rates. Everybody's blaming it on the Federal Reserve right now. The fact of the matter is we've been in kind of a utilitarian or a utopian society for the last 10 years. And that I believe these low interest rates have actually really contributed to the acceleration in the stock market. And if we can't get to more normalized rates, which is about 3.25 on the 10-year, we're gonna suffer. And I don't really understand this whole blaming the Federal Reserve for the stock market hiccup this week. I actually disagree wholeheartedly with that. I believe the Fed is a lot smarter than that, and all they're trying to do is normalize rates, which over the last 10 years, they've been far from abnormal. But really good to see you in the group, Jared. It's nice to see you. Appreciate your support of the channel, and especially in the Facebook group. You can kind of notice when I engage in the group and when I'm off the grid, I'm doing something else as well. Something that's probably worth mentioning in the group here, I'm going to be scaling back a little bit on my self-direct help. You know, when the Independent Investor channel started, I was offering self-direct help. I didn't know what would come of it. That's one of the most enjoyable things that I do. It really is. The problem that I've discovered a little bit isn't that it's inherently beneficial for me to help folks, and it's never really been about the money. It's really about the time commitment that I put into each one of those self-direct options. It may be a service that I roll back out at some point down the line in the evolution of the independent investor channel, but the opportunity that I've provided to the folks that are pending in their review, I've got those folks already close to done, but I probably won't be providing that opportunity going forward here in the near future. It's very time consuming, and with very little compensation, if not no compensation at all. It's a tough ask. Especially when I've got other obligations on my weekend, other than to do, financial portfolios for folks. And it's really quite a time drain for me, because I kind of put my heart and soul into it. I really do. And I want to make sure that people get my best effort, and they absolutely do, but it's really taxing on me. So I'm going to pare back on that, just an announcement through the group. And I hope you guys can understand my position on that. It doesn't mean that I can't open up the envelope down the line, but I'm gonna shut the door on that for a while. I kind of offer it sporadically. I've offered it twice now, and this last one has been really, really good. I've had the opportunity to speak to some awesome people, and I'm humble. I am. I will say that I believe in my heart that I've changed those lives, no doubt about it. But I'm gonna go ahead and put that opportunity on the shelf for a while, and just focus on making some YouTube videos, and focus on some of my other obligations as well. So I hope you guys do understand that. So scan through here. I am live. Yep, I've got Homer. I didn't block you, man. I think you came back and said that I had blocked you on Facebook. I absolutely didn't. I don't do that. I don't do that. When I don't answer a question on Facebook or something, there's a very good reason for that. I'm not one of those YouTubers that does this to put food on the table. I do it to help folks and let folks know kind of the road that I've traveled, right, wrong, or indifferent. I do really wish I could respond a little bit more. This last rash, one of my videos this week did fairly good by my standards. It went viral by my standards. I got 4,000 views. So that's viral for me. I don't even know what that means, to be honest with you. I leave all the viral video making up to Ryan Scribner, but I don't know how the guy does it, man. He's like a magic man. Anyway, yeah, no, it's good to see you in the group, man. If there's anything that I can do for you specifically, please let me know. Greetings from Canada. That's awesome. Matt M is on the line here from one of the most beautiful countries, man. Very cool to have you. I've got my good friend Ernest in the group here. Probably one of the smartest people that I've ever come across. I'd really like to meet you in person someday. Your contributions to the group. I know there's everybody in there. We're just over 500 members of the Facebook group. If you haven't joined the Facebook group, I encourage you to kick over there. Join the group. There's a lot of killer articles in there, some great material. I can speak for myself. I'm learning an insane amount from some of the stuff that some of my admins are throwing in that group, and it's for everybody's benefit, honestly. It's really just to strike up a dialogue with the community and provide that information firsthand. So kind of scroll down here. Anybody like Sears? Obstinate One, you're really hung up on Sears, man. You could get a portfolio of Sears, Rite Aid. What else could do in that portfolio? JCPenney. Think of stocks under $5. I don't know. I'll leave that topic to Jeremy. That's for sure. That's not something I'm going to do. So I buy stocks like Amazon. That's just what I do. And we'll get down to goal number 2. So for you guys that are new, it helps for me to kind of identify some of these things to where if you do watch the channel and you get some entertainment out of it, great. But it is a partial education opportunity as well. And this is one of those goals that I really take to heart, introduced to the most important aspects of investing. The most important aspects of investing are those aspects that they get shuffled under the rug on a week like today. You know, people tend to lose track of why they started investing. You bring to light some of the things that a lot of people don't understand, the benefits of compounding interest, how to use a compounding calculator and introduce, what it means, the effective fees over investments, understanding dollar cost averaging, understanding dividend reinvesting, understanding a dividend. There was not one time during this week that I wasn't paid a dividend, right? Nothing happened to my share accumulation. The benefit of controlling the amount of accessible cash that you have available to yourself, that's very important. And I find that all too often folks are just focusing on that negative value, and that's the ironic part about me putting out that video of the $5,000 I lost this week in the stock market. I mean, I don't really care. I don't really focus on it that much. I'm looking at all the aspects that I just mentioned to you guys. And I find it interesting how a video like that is much more popular, online. I don't know why. I don't know if it's the shock factor or what the deal is, but I would encourage you guys to take some inherent lessons. You're going to have to think outside the box to be a successful investor. You need to think about what strategy is going to work for you. What is it that's going to make sense to you? If you watched what happened in the stock market this week and you're like, whoa, that's not for me. I can't take that. That's absurd. You're insane, Ryan. That's a piece of criticism I could take, because it does take a little bit of, I don't want to say devaluing of money. I don't, but you have to just understand that it's taking on a different form. And I've done one of my favorite videos that I did in my catalog. It was one of my very first videos where I talk about the different forms of money. And it's really, really important for people to understand that if they're going to succeed in investing, when you turn over that money, it's no longer Walmart money. It's no longer go to a restaurant money. It's no longer go in your fuel tank money. It's invested capital. And if this resonates with you guys, I want you to make sure that you're not surprised when your investment capital acts like investment capital. Now I look at the $5,000 I lost this week, and I say, was it acting the way invested capital does? And the answer is yes. So why are people so surprised when the stock market gets turbulent like this? And for a lot of you guys, I know if Ernest and Jared Odell are still on the line, I'd love to hear their thoughts. I think it has a lot to do with the algorithmic selling now that's built into machine learning and machine trading. But I think a lot of it still has a significant amount to do to people panicking and going into their brokerage accounts or their retirement accounts and putting in market orders unknowingly. I think if you put in a market order when the stock market is doing what it did this week, you don't know what you're doing. You're making a big, big mistake, okay? What I mean by that is if you bought a stock like Cisco at $45 and it went up to $48 and it started to tumble, all right, and you put in a market order, you may have had the opportunity to sell that at $46.50 for a profit, but instead you put in a market order and the market order ends up picking up at, $45.20, and you end up losing because it goes down that fast. It can't tell, because there's so many sell orders coming in at the same time, how to really value the stock. Now, when volatility is really low, you're going to put in that market order and it's going to be fine. That's typically how I trade or buy stock, is through market orders. I don't want to screw with limit orders. When I want to buy a stock, I just buy the stock. I don't mess around unless I'm trading after hours. But I really think that's what kind of accelerates that selling when that's going on in the stock market. It's really unfortunate because they're going against one of the major principles that I talk about all the time in investing, and people have said it over and over again. The people that sold yesterday, they in fact missed out today, and I guarantee there was thousands and thousands of people that missed out on today's return, and that's just the way of it. hell, they could be right. You never know. Next week we could be in for a lot more losses, and maybe they're sitting on the sideline. Who knows? The only way to really ensure that you're in it for all the ups and all the downs is to stay in the stock market. That's it. That's the most sound advice that I can possibly give you. And that's kind of in line with goal number 2, is to make sure that you're understanding all the validations that I talk about, and why you're entering into the stock market seeking participation in some of these good companies. So pretty killer stuff. I want to scan through here. Just started my portfolio. I've got Cotran 83. Very interesting comment. Just started my portfolio, and currently I'm thinking 50% index funds, 25% dividend staples, and 25% growth stocks. Your thoughts? Yeah, I would take the 25% in the dividend staples. I don't think you mean that to mean the staples sector. At least I hope not, because I'd like to see those dividends payers split up strategically depending on how much we're looking to devote to the stock market. If you're starting with $1,000, I don't know how big of a dent you're going to put into that plan. I think from a framework perspective, I think you're really good. I think you've got a fabulous framework. But again, if you're working with around $1,000, you're not going to be able to do all that at once. Okay. You might be able to buy a couple shares of an index fund or a couple shares of the S&P 500 index fund, whether you go with SPY or VOO, any of those. I think Homer was the one that offered up another index fund as well. And if you want to throw that into the community, it was from Charles Schwab this week, and I looked into it. It was really, really good. It's actually an index fund, so it didn't really compare to the VOO, but it actually carries a lesser of an expense ratio. So he was able to hit me up with that, and I looked into it, and it's legit. It's good. It's really good, with an expense ratio of 0.03. And I do forget the ticker symbol. It's a long index ticker symbol, but it is through Charles Schwab. So if you just Google search that, or if you can throw that ticker symbol into the group here, that might really benefit you as well, because those shares were selling at around $42 a share when he shared that with me. I thought that was pretty awesome. But if you're starting with 10,000, now you can probably fulfill all your goal there. But if you're looking at dividends at 25% of the portfolio, you certainly want to look at a wide range of dividend payers to get, exposure across the board. Your J&J, your Pfizer, your Verizon, just get some good exposure to all the different sectors. Disney is a screaming buy right here. I've been saying that for years, and I'll continue to say it. The amount of years that I've been saying it doesn't minimize the fact that it's a buy. You got to have Disney in your portfolio. I beefed it up as well. I'm not sure what my current position is, maybe 48 shares or so in Disney, but you got to have it. The other screaming buy right now is JD.com. That's probably one of those stocks that you probably can take a little nibble at. So if you're talking about a portfolio of 25% growth stocks, I think that's a little rich. I think you could pare back on that and just add one growth stock, one. It doesn't have to be 25%. That's pretty aggressive. I'd like to see go with the 50 index funds and the rest of it stock portfolio, do a 50-50, and then add, a nice growth name like a JD.com. I mean, depending on how much you're starting with, you could probably pick up a really good position in JD.com right now to satisfy what you want in the growth section of the portfolio. But never, ever hurts to start some of those cornerstone pieces in the portfolio of a Johnson & Johnson, Pfizer, either one of those two. Maybe pick up your Apple computer. Apple went up $8 a share today. You had your opportunity yesterday in Apple, big time, but it doesn't give you very many. But I think you could buy. I think you could buy Apple at any time. Microsoft on the dip is a good long-term buy. The forgotten IBM, I've forgotten it and probably making a mistake, because that's typically what happens when you start forgetting a stock. That's when it starts to go up. I do like CRM, Salesforce. I know there was somebody in the group here that talked about picking up a little bit of CRM Salesforce. That was a good pickup this week, but it happened so quick and so violently. I mean, if you had the mental fortitude or the cash on the side to make those buys when it was blood on the streets, man, I give you some kudos. It takes some courage to do that. It really does. I would have done it, but I just didn't have the opportunity this week. That's a really good scenario. I would just adjust it a little bit on the top end side. I think 50% minimum passive is good, but I think you could do the other 50% stocks, because I think, and unless you're starting with 10, 15, 20,000 bucks, you're not going to be able to make a very big dent into that. And there's certain cornerstones that I'd like to see in that portfolio before you start really branching out on the growth stock side of the house. So. Lydia, right below you, says, I was happy the stock market was down. I added more Visa and Roku. Smart. That's just what you do. So Lydia's talking about strategic buying. And my video that I released today on timing the market is not the same as what she's doing. That's opportunistic buying or strategic buying. You can call it whatever you want. But that, in my opinion, is a strong move in the stock market that will pay off in time. My example of timing the market was a little bit different in how I look at it, in that folks are looking to go all in on the stock market, sell everything and buy everything. They're in, they're out, they're in, they're out. But when you're looking at a specific building a position in Visa, which, I mean, you could own Visa the rest of your life. You really could. That could be a stock that you own the rest of your life, and it really pays you back later on in life. So I just think strategically buying here a little bit recessed is a smart move. There was some institutional buying today of Visa as well, which I found interesting. It was the top stock in the Dow today, Visa. You bet. So I think that's really smart on your part. Roku's cool. I think it's a cool product. I don't own the shares of Roku right now. I don't own a lot of those types of stocks right now. I've got my portfolio really dialed into a lot of blue chip majors and larger growth companies. When I pick up shares of Amazon and Google at the same time, it really takes a large percent. I think 6% I've got right now in Amazon, and closer to 5% in Google. Right now with those holdings. And then, of course, I took Facebook into a pretty big downturn here. We'll wait for those shares to turn back around, which it will. Facebook's a buy right here. That's easy. That's silly, stupid, easy. But yeah, Facebook's another good one. If you wanted to enter into a position, I hardly call that a growth stock anymore, even though the numbers are growth-like. The price to earnings multiple has come down. It trades at a recessed value right now for not a lot of, I don't think there's a lot of justification behind it. I understand consumer confidence. I understand that. But I think just talking about, data breaches over the service that they provide and the loyalty of the customers that they have, it's magic. It really is. It's really amazing. There's no other company like Facebook, and I don't know if there will ever be another company like Facebook that has such a stranglehold on the market that they do. So that's just my take on it. I'm relaxing. Traffic is no good. It sounds like Los Angeles. Larry Massa. I've got Bob Wright here. I responded to a comment from Mr. Bob Wright today, so I hope that helped you on my response. Thursday was a nice shopping day. I couldn't resist the sale. That's what you said. I think I responded to you actually on the video, Bob. It's really nice to have you in the group. Now that I'm back in my routine, I'm gonna pick up on a lot of my different series that I'm doing for folks. I'm probably gonna do a whole week on military investing. Probably finish out a whole week on folks that are over 50 that are looking to invest. I certainly had. I have messages for anybody that's holding over $500,000 capital right now in the market. And I think you guys would be encouraged to hear out my opinion. It's going to be contrary to what the financial planners are telling everybody right now, but that's just my opinion. Of course, they want to bring in money under their umbrella to invest it for themselves, and I don't have an agenda. So I'll just give you my honest opinion. I think anybody that's fully invested right now with $500,000, $750,000 of assets are trusting this market to do what, I'm not sure, without thinking about the option of pulling some exposure off the table is crazy. It's the same advice that I would tell anybody if I was in your same shoes. And if I was in your shoes with 500 or, so assets invested, I think I'd be putting some money to the side right here. I really would. I've got Officer Towers right below, Ryan. I've been buying VOO like crazy lately and bought Amazon at 17. Wow. You got a great entry point. You need to go long on Amazon. You notice how brief those buying and entries are on Amazon. That's really, really good. That took some skill to pick that up at 1,700. My hat off to you, no doubt. I was looking to strategically buy it as well. I did not get the opportunity. It would have taken me putting a limit base, a limit in, and then just hoping that it picked up. But definitely holding mostly cash and money, market funds, and my family's retirement accounts just in case there's a nice sale. Yeah, it's probably prudent. I've been doing the same thing for a while. I typically address this comment in an interesting way. I just think people in general are way too overexposed to the stock market. I do. I just think that people think they have money, so all of it has to be tied up in the stock market. And the folks who have contributed to that idea are the money managers. They really are. They sell you on some cliche BS that makes people think that, oh, because they're young, they have to have every last dollar in the stock market. And it's just not a position that I agree with. I actually agree with your position. I've probably got close to, in cash position, I've got at least 40% in cash right now, at least. And it'll continue that way. It really will. I'll continue to build cash. If the stock does go on sale, the stock market, as you allude to, then I will be strategically buying, but I will never go all in on the stock market, ever. I won't do that. No way. My investment capital is my investment capital, and my cash capital is my cash capital. And that's just the way that I feel comfortable doing it. And I'm fine doing it. And I don't mind advocating along those lines either, to make sure that you look at your portfolio, not necessarily holistically all the time, but look at it as a set of pillars, with different subsegments within the portfolio that are all doing different functions. You know what I mean? And I just think cash is one of those functions that is serving a function. And I have to explain this all the time. People are like, I need to have my cash working for me. Why? Why do you have to have your cash working for you? Don't you have cash over here that's working as an investment capital? Then that cash is working for you. That's fine. But this cash over here is remaining liquid, static. Yep, it's losing value every year, and I'm fine with that. I really am, because it's not subjected to risk. So it is doing something for you. It's doing exactly what you're asking it to do, remain static. And I think there's inherent value in that. I do. So it's a pretty awesome question. You put another comment below it here, man. I'll get to that. I always set accounts to take the match, free money, and do fund transfers on bad red days to get the most out of our contributions. Did you get that from me? I'm the only one that I've ever heard talk that does that. And I've mentioned, you've been with the channel a long, long time. And I mentioned that a long, long time ago. And it's awesome to hear that people are kind of taking that strategy. Just imagine kind of on a graph where you take every single one of these injection points, and every single one of them, I think the bigger the down day, the juicier the buy point is. 400 or 500, those don't happen very often, But if you can piece together some, triple digit down days over and over and over and over again over the course of your life, I just think that's easy. That's easy. That's like shooting fish in a barrel, as far as I'm concerned. Always buy when people are selling. That's easy. That's really cool to hear you did that, man. That's really cool. Grab some AT&T on the low. Laugh out loud. I didn't even see what AT&T was starting on an upswing. So I didn't see what it got to. So you probably did quite good for yourself picking up some AT&T. I've got 100 shares of it. And to just rake in the fat dividend every quarter, I'm good with it. I probably own AT&T the rest of my life. I'm happy with the acquisitions that they made, both DirecTV a couple years ago and now the newest one with taking on Time Warner. So I'm encouraged by it. I've got Brent on the line from down below here, man. Very cool to see you. Another channel creator with the financial investor. Hey, what a week, right? Wish I had waited another week to stick money into the market, but oh well. Yeah, I think I bought at a bad time too, but that's okay. I picked up some good stock. I'm happy with that. It's no big deal. Not the end of the world. I'm still around. I'm still, yeah. So for you guys, I just scrolled back over. Homer has got the ticker symbol to that S&P 500 index fund. And if you guys are interested, I'd like you guys to add this to your watch list. If you guys have a good index fund to watch list, SWPPX is the ticker there. So thank you for that, offering that to the group. That's awesome. I looked into that and it's legit. It's really good fund. It is an index fund, so it's not going to trade during the day. It's going to do your trading after the day for your dollar cost average contributions. So it is a little different than the VOO, but I was encouraged by seeing an index fund with that low of an expense ratio. So pretty ripping. I got Chuck M. Chuck from Lake Tahoe. Hi, Chief. You're the best. I appreciate that. Jesus. Like I don't get called that enough during the day. Good grief. I appreciate that. How's it going out there, man? Living in the most awesome place in the universe. It's tough, right? Yeah. Yeah, it blew 80 knots here last night. So I hope you're doing good out there in Lake Tahoe, man. To beat you up a little bit. It's awesome to see you on the community here. We still need to get together and do that talk. So I've got Benjamin Levy as well. Yo, yo, yo. That's his tagline. That's his go-to. Yo, yo, yo. He's my young investor prodigy. He's going to be sitting on $10 million by the time he reaches my age. So it'll be fun to watch it too, because I'll be an old duffer someday watching Benjamin Levy run the YouTube from the command station. That'll be pretty fun someday. So it's cool to have you in the group as well. Let me scan back up here and make sure that I'm following off where I left. This YouTube skips around. It's hard to track. So that's why I miss questions sometimes. I see Matt O'Connor here in the group. I see prices going down and keep thinking I should buy more based on historical trends. What goes up, down, will go up. Am I thinking about this wrong? You're not, but I want you to just keep it in check, okay? You don't have to bet the farm on a stock market with this much increased volatility. If the China trade situation does not work out, it's going to send a tremor to the market. With interest rates going up, another thing that we haven't really talked about is the leveling off of home values in the U.S. That's another thing that I'm concerned with. I think home values right now, and I don't want to offend anybody that owns a home, but first of all, congratulations, okay, because you've accepted quite a significant amount of appreciation. I was part of that appreciation as well. However, you're probably in a home that's probably overvalued right now. Sorry to tell you. And interest rates are going to make it that much more overvalued. And you're like, well, Ryan, how do you figure, man? It's the same house. And that's just the way of it. If there is less demand on your particular property because interest rates have come up, driving the 30-year mortgage up, people aren't going to, there's not going to be as many people entering into the housing market as before. That's just my feeling on it. And I feel that's probably an underlying systemic risk to the stock market. You guys remember what happened 10 years ago, right? It wasn't that long ago. That was all housing related. Now much more to the subprime lending scandal, etc., things like that. I don't think that's going on. But I think since then, home values have been really fluctuating and entering into kind of bubble territory. And it's indicative here where I live right now. So really cool to have you on the line, Matt. You're not thinking about that wrong. I just don't get crazy with, exercising scale. And I don't know what type of capital you're working with. It's relative. If you're working with $1,000 or $50,000, my answer to you, might be a little bit different. And that if we're working with $1,000 starting portfolio, certainly could put all that capital to work. I don't mind that a bit. If you're young enough and you can weather downturns like this, you're going to be able to weather any storm at your age. But if you're talking about 50 grand, now we want to look at scaling that position. And I'm talking crazy scale. If you had $50,000, take 5 grand, 5, take 10 maximum. All right. You see my thought process there? Why get crazy? If you went to a financial planner, they'd want all 50 grand. Here you go. Here's 4 mutual funds for yourself. Congratulations. You're an investor. That's the reality of it, which kind of brings me to point number 3. Another benefit of the channel, man, if you're going to start investing, you're thinking about it the right way, but I also want to reemphasize the importance of the greatest gift that I've given any subscriber that comes to the Independent Investor channel is to understanding the importance of the bucket that you hold these assets in. I know we spend a lot of the time talking about stock because it's fun. It really is. But I had one of the guys on the channel today talking about the trading that he's doing in Robinhood. And that's fine. You just have to understand that those trades are going to be subject to short-term capital gains. One of the guys on the Facebook group, I don't know if it was Jared Odell or if it was Adolfo. Adolfo is another one of my admins that I just think the world of. Just so sharp with his responses, talking about a situation that I got put into with trading within a brokerage account and not understanding the tax implication of those trades. So you really have to be cognizant, why do it? Why not start that retirement account, get those single stocks built up in there. And then if you start to max fund the retirement account, then start that additional brokerage account on top of the retirement account. It's not going to hurt you. Then you can do some strategic trading in the brokerage account and just and try to accelerate your income. That's what I do. I've probably made an extra 4 or 5 grand just this year, just on top of my regular income, just by trading in and out of stock in my brokerage account. That'll all be subject to short-term capital gains taxes earnings. Okay. So I'm fine with that. It's just, the greatest gift that I can provide you guys is the benefits of becoming a self-directed investor. And if you don't know what that is, go back in the catalog and review some of my chronicle of videos, man. And that actually brings me to my 4th goal of the channel, which is to separate distraction from reality. I'm going to say it again. Separate distraction from reality. I see this all the time where new investors, man, it's so sad in that you have a very steep learning curve in that my charge for you as a new investor is to get it right away. And it's a very, very difficult charge for a lot of people, man. They're looking for information. They don't know which way to go. They want to trust the information that they're getting. That's why I'm very careful. And I always give fundamental information. I don't just say, go buy JD.com exclusively and you'll make money. Now that's a definitive. I don't talk like that. What I would say is, get the account started correctly, get the cash set up correctly, get the budget under control, right? Strategically enter the market. If you have $1,000, start with $250. You see that line of dialogue and how different it is in that we're being constructive, all right, and not careless with our recommendations. And I find this is such an important piece to getting people to think about how important it is to not get sidetracked. You don't have to join stock market groups. You don't have to do any of that. I know Scribner will probably beat me up over this, but his monthly stock market radar course is probably the only one that I recommend. But the thing about it is, you really have to think about it, man. That $20, over the course of a year, I mean, good grief, guys, it's $250 that you're just throwing away on something. Maybe you get some benefit out of it. Maybe you don't. But how much in the hell research do you have to do to know that you can buy McDonald's and make money? Honestly, I get hit with this all the time. How do you do your stock research? How do you do your technical and fundamental analysis? I don't. Do I know how? Yeah, I do. I love charts. I love it. And it's part of my decision-making process. I'm not holistically. But the fact that Johnson & Johnson has paid a dividend over the last 100 years straight is way more attractive than doing some sort of fundamental analysis on it to justify entering into the position now. And I've said this many, many times. You can do a technical read on a chart of a stock and justify buying it up and down, and it'll go down. I've tried. I really have. So there's a lot of intangibles to read. I think balance sheets are the most important thing to making, your strategic stock buy. But I own AT&T. AT&T is full of debt, and I think the stock is recessed 25%. That's just the way I feel. And I'll sit there and rake in the 6% dividend until it gets settled out. It was on its way up until this market hiccup hit. So kind of really important for you to understand, not to get sidetracked in the stock market. And for me, it starts and ends with choosing to go self-directed or choosing to go with representation. And that impasse right there is critical. And it's scary for a lot of people who are new in the stock market. Maybe mom and dad are like, what are you talking about? You're listening to a guy on YouTube? Yeah. Yep, I just so happen to be on YouTube because it provides me a conduit to talk to masses of people. That's just the way of it, all right? Don't hold a grudge on me. I'm right, okay? That's just the way it is. And that's the very impasse that people don't want to look at and say, gosh, man, this feels right. He's very convincing, or wow, but I just don't know anybody that does this. Is it legit? Maybe I should go with this professional over here that's got a nice suit and tie and a really nice oak desk and a nice fake plant in the corner, has a really nice office, because that facade really makes me feel comfortable. And therefore I should have some sort of feeling that I have a strategic advantage in the stock market, right? And that's the impasse that I talk about all the time with people, man. It's really critical that you get that decision right. Right up front, and it's a hard act to follow. Most people, myself included, end up screwing up first, and then realizing the errors of our ways, and then switching at some point. And I went from a managed account, a managed Roth IRA that I had built up to, $25,000, I think is what it was when I transferred over, maybe even less than 20 grand in that account when I transferred it over. And now I've since almost tripled that account. So that's in the last 7 years. So pretty impressive performance. But that's a really good question, man. Matt, it's really good to have you in the group. Sorry to go off on a tangent a little bit, but very, very cool to have you in the group, man. Let me scan through here and get to some of these. I'm probably going to earmark a minute, hour and 20 tonight for the live feed. It's been really, really good. I knew it would be tonight. I knew it'd be a lot of fundamental investing to talk about. It's because companies have accumulated corporate debt during the low interest rate era. Exactly. And that's what I'm worried about. I'm worried about that. When was the last time you saw any word about the U.S. debt, national debt? Haven't heard a word. It's like the biggest secret out right now. It's like they don't want to derail the stock market by talking about the reality that this country is in debt. It's crazy. I don't get it. That's my biggest worry about the stock market is the debt. That's my biggest one. It's not housing. It's not interest rates. It's not the labor market. It's not GDP. It's not earnings. It's none of that. It's debt. That's it. That's my biggest concern in the stock market. I've got Scott S. on the line here. None of the good brokerage houses are afraid of Robinhood. They'll all have free trades soon. Oh, yeah, absolutely. Geez, it's not even worth it. It's not worth it for them to piecemeal people away at $6, $7. They're lowering trades now to close to nothing anyway. I think you're right on. It's not worth it. It's so much more worth it to bring those assets into the brokerage house and then give those little trading incentives to everyday traders like me. We're nothing. We really are in the grand scheme of things. These little portfolios that we're talking about now, power in numbers is important. I mean, make no mistake. I started the Independent Investor channel with 1 subscriber, and I'm looking to start a movement of people who are self-directed investors. If you want to know the truth of it, I want to empower people, and together it's a very, very powerful group. You see the aggressive messages coming through the airwaves talking about, oh, I'm a fiduciary. It's all the lingo that we look to exploit on the independent investor channel. You know, you got guys like Fisher Investments, man. They come on and they talk about, hey, if you have $500,000 to invest, come and talk to us. It might be time to graduate to a better future. It's like, that's the most condescending thing to say to somebody that I've ever heard. And it's commercial after commercial after commercial. It shows young kids, you know, where they're going to college, or young kids that because mom and dad have invested in this broker that somehow they're good for my child and they can do a video teleconference and somehow the fees are worth all the garbage services that are provided. It's not. It's not. It's all a facade, man. It's all part of the game. And I'm so proud to not be part of it. I'm so proud. And that's what I'm just trying to share the message with you guys, because I'm not the only one that thinks that way. There's no way in hell. If nothing else, coming out the independent investor channel, I've done nothing but validate the fact that there's a lot of people out there that are quite frankly kind of pissed off, just like me. And they want to be liberated with their dollars, man. They don't want to share it with anybody. And I can't blame you, because I'm the same way. Trading fees is a very small percent of business. I agree, man. Scott S., man, such a sharp person. I'm so glad to have you in my group, man. Another person I'd like to meet in person someday, man. I love your comments, man. You're sharp, very, very sharp, very astute. I love it. Also, consumers are tapped out living on credit cards. Yeah, the average household debt went up again this year. It's nasty. I don't understand it. My debt to income ratio is, I think, 2% right now. It could be 0. I keep it at around 2% right now. I do carry a little bit of credit card debt. It's nothing. It's a big deal. I could pay it off tomorrow. But yeah, it's people let it get out of control. It's wild. It's sad. I don't know. Hopefully some of the fundamentals that we push through can help. But honestly, you know, if you're that far in debt, there's really nothing that I can do in way of, you know, words. Because at the end of the day, if you're in that position, which I was in my life as well, you got to want to step up and take care of it yourself. You got to want to help yourself. So there's nothing that I can say, you know, some magic statement or some magic financial plan that we can put you on to eliminate the debt. You just got to pay it off. That's how it works. David Mathis says that Jared always has good comments on the Facebook channel. Well, that's what I've noticed as well too, man. I should start paying him a salary, actually. But if I was making any money off of YouTube, I would. I'd share in some of the profits. But maybe someday, Jared, I'll hook you up. You'll always be welcome at my house. That's for sure. Always. And we'll see what happens. But I do agree with that. That's very kind. Randy, you do so much for us with the videos. I hope so. I put my heart and soul in it. It's kind of low key. I mean, I'm comfortable tonight. I'm not wearing a suit and tie. I apologize for that, you know, so I can portray the right image. You know, image is very important. It's one of my least popular videos. It's also one of my favorite videos. Image is everything. But I'm glad you guys take value out of it. I try to think of everything that can really hit home, talk about different topics in different ways, you know, kind of revolve around different topics, certainly. I'm going to go for a couple more minutes here. I think I'm almost to the end of the questions here. Really appreciate your guys' time on a Friday. Hope you got some value out of it. Certainly stay tuned for rolls. I'm got a fire now to really hit YouTube for all the right reasons. I'm not concerned with subscriber growth anymore. I'm not concerned with monetary growth at all. I'm looking to get content out there to folks. That's what I'm doing. So it's a very deeper desire that I have to go ahead and push it and put the Google algorithm to the test. So they haven't really noticed me yet, but I'm going to put it to the test, and they pissed me off. So we'll see how long they can continue to ignore the independent investor channel before they start promoting my content correctly. So do what you can do to share the channel. This is kind of my informal connection with a lot of the plank owners, man. A lot of you guys come into this group some of the folks I've seen for the first time this Friday, and I do appreciate you coming in brand new. But for you guys that are new to the channel, I'll say it to you just like I'll say to everybody else. You guys have got to help me share the message, okay? I have no problem delivering this really as the ambassador of the message. I have no problem with it. But you got to help me share the message, man. You really do. People need to have this information in their hands. They really do. The power of self-directed investing is very, very empowering. It really is. And the majority of this country, like was noted here, are in debt or are either making less than 130,000. That's double what I make. So anybody that's making less than that is eligible to contribute to a self-directed Roth IRA, not to be mistaken by just a regular Roth IRA that you attach to a managed situation. You got to go with the self-directed option. That's going to be the one that opts out of the fee structure that's prevalent in most of the offerings when they're giving you a Roth IRA, and then only to go in there and subject the account to unnecessary fees within the account. So again, I'm going to kind of scroll here and make sure. I believe it's a good time to buy into a lot of gas stocks, Ryan. Believe they'll go up in the near future. Yeah, I agree. My favorite is Devitt Energy. Chevron is a fantastic gas stock, actually, and I've owned Chevron for years. I do own ExxonMobil, you know that, but a purely gas play, Pioneer Resources is very good. Devon Energy is very good, based out of Oklahoma. They're in the Permian Basin as well. I like Marathon Oil, man. Marathon Oil is good. I didn't even look at what damage was caused to Marathon. Marathon Petro, that's good. All those are good, but don't overestimate Chevron in that field. They're kind of best in breed with gas. But if you've got any other offerings, shoot them my way, because I think you're absolutely right. It's been recessed for a long time. LNG is the wave of the future. Give you a little bit of insight on my personal feeling on liquefied natural gas as well. I think it's the wave of the future. I think Jared Odell probably has some comment as well, because he's kind of based there in the petrochemical universe there. That's where I used to live. Houston's the real deal for that. Let me scroll down. I've got Ernesto Alvarez in the line here, man. It's really good to see you. Thanks for all the Rite Aid is the wave of the future. That's awesome. You don't like that portfolio I built for you? Portfolio building, stocks less than $3 a share. Jesus. Let's see. But it's good to see you, Ernesto. Good to see you in the group. Scott S. Then Matt O'Connor, man. You want to hit Scott S. up with any questions. He'll take care of you solid. Jersey, Ryan, how did you decide, had the courage to start your channel for the past year? I think about starting my own channel about my masonry company in Chicago, but I'm afraid, shy to do it. Oh, hell, I'm still shy. Good grief. I'm 200 videos deep there. I'm getting a little bit better at it. Go back and watch my first video and tell me if there's not a difference. It's funny. But I think a lot of people like that. I was nervous as hell. I think for the first 50 videos, man, you don't know what you're doing. You don't really know how to script and coin videos. Still don't script videos. I don't snip edit. Scribner got on me for not snip editing, but I don't really care. I want people to realize the genuine me, and that's not what comes across in the first couple videos. I'm really stoic, and just kind of talking to the camera, and it's funny. You should go check it out, really. But here's the thing about YouTube, and I'll give you my spiel, and I very rarely talk about YouTube and start a YouTube channel and all that, but I will give you my perspective because you might benefit from it. If you're a Mason and you have a trade skill or something, and you've got something to offer folks, and you can throw it on YouTube, I would encourage you to take these things into consideration. Number one, you have to be passionate about your topic. Okay, you can't get 10 videos in and be like, wow, I really don't enjoy this anymore. Or, wow, I feel like I've run out of topics. And that's why when I chose this, finances and money would have been my only topic. All right. I do like to cook. I could do a cooking YouTube channel, which I'd probably have 10 million views because I can cook. I can cook good, really good. But stocks and finances are really my thing. The thing about it is there's a lot of stocks and financing channels out there. Well, what makes the independent investor channel a little different? Or what would I consider to be important in coming out with a YouTube channel where there's a lot of other channels doing the same thing? I would say that having a niche is really important. Try to find that one thing about your channel that's different. I really do. And I'll pick on Lydia for just a second here. Actually, I'll give a compliment. I'm not going to pick on her, for crying out loud. The reason why I endorse her channel, I really feel like at the top of this broadcast, I talked about the importance of, woman, male. I don't care what color your skin is. I don't care what your economic, your socioeconomic background. I could care less. Money and investing doesn't have to discriminate. It doesn't matter where you come from. I've got all people of all different, creeds, religion hitting me up. I don't care, whatever your sexual orientation is. I don't care, because it's one of those topics that can apply to everybody. And the cool thing about Lydia is that she's a female. And I have about 3% of my audience that watch the Independent Investor channel. I've never really understood why, because investing is for everybody. And I think no matter what, depending on your interest in investing, if your heart's in it, I don't care where you come from. Or I don't care, as long as you've got a desire to succeed in investing, you can succeed. So that would be a niche that I would encourage her to exploit, in that people look to her and say, wow, if you can do this, I can do it as well. And so back to your question, I would leave you with this. YouTube for me means I can make an investment in a video and that video will never go down in value. Tell me a stock that does that. You think about that? Another scary thing to think about when you're talking about the potential of YouTube going forward is where it'll be in 10 years. Where's it going to be? I mean, the Independent Investor channel, I consider it a brand new channel. I do. We've been around for 2 years. We've built up a nice subscriber base of going on 10,000 subscribers. We're pushing out a really fun message. I've had an opportunity to network and meet other channel creators. I wouldn't have had those opportunities had I not had YouTube. So is it worth it in that respect? Yeah, it is. Is it worth it monetarily? I will tell you no, not right now. It's not. No way. So if money is your sheer motivator to start a YouTube channel, I would save yourself the time and the effort. I really would. There was a $500, $550, $600 investment just to get the LLC started. I was willing to make that investment in myself. I was willing to make that investment in my subscriber base at the time, because I think the channel had been going for about a year before I incorporated the channel. And now everything's, under the Cornerstone Capital Solutions is the company now. And hopefully it ends up growing and it's starting to kind of pay off a little bit. But there's not a lot of people who will work for free in this life. No way. My passion is derived from a different place, and I will leave it with that. If your passion is in the topic that you're looking to devote, make sure your intent is in the right place. I see a lot of folks that start a YouTube channel and their sole driver is money. That's it. I see right through it. I really do. And if your sole driver is money, you might be sorely disappointed, I think, in your ability to generate and become wealthy so you can go drive around a Lamborghini all the time. I just think that's what a lot of people think of when they start YouTube. And the folks that I tend to sponsor, I like to see a little bit more genuine approach to the delivery, and not such a side agenda to just be making money all the time and generating revenue. I think if you do it right, over time, that'll end up paying off. So hopefully that helps you. Thank you for providing me that opportunity to give some insight. I don't typically talk about YouTube at all. I typically keep it straight with finances. I could probably do a series on YouTube. It's very, very humbling and challenging. They don't send you a manual and say, here's how to build a YouTube channel, man. You got to figure it out. You're going to watch a lot of other YouTube channels and on how to do certain things, how to tag videos. All that stuff is very, very tricky, and I'm still struggling with it. I'm still not sure if I've got the secret sauce dialed in just yet, but that's kind of it in a nutshell. Hopefully that answers your question. That's really cool. Good luck with it. I do encourage it, because I hope my explanation of, you know, coming out with videos, each little video is its own little business, and you might make a couple cents, you know, a day, or a penny a day, or a fraction of a penny a day. But once that's posted, it's making you money, you know, on a regular basis, and it never has an opportunity to go down. And again, an investment like that with very little overhead or capital, I'll take that investment any day. All right. We're going to get down to the end. We're going to kind of try to, how do I find you on Facebook? Lydia, the link is on the Independent Investor Channel website. Just click on that quick link on the actual homepage on YouTube, and somebody can send an invite to you. We'll make sure you get in the group. It's not a problem. Get you in the group. It's not a problem. You just click over to that link, and it'll push you right into the Facebook group. We'll make a point to get a link in the bottom of this if we can for you, and you can just click right over to it. So really cool. So SWPPX, the S&P 500 index, Schwab stock at 0.03. Expense ratio is better than VOO. What do you think, Ryan? You know, I think, man, I tell you what, we're really cutting teeth a little bit when we're talking about that light. I deal with people all the time that are in mutual funds paying a point and a half, you know. So I think 0.03 is really, really good. I've never seen an index fund. Actually, a more fair comparison is actually not VOO, but the VFINX, which is the index fund for the S&P 500 from Vanguard. And I think it's a lot higher. I think the Admiral shares are 0.04 as well, but I think the investor shares is like 0.14 actually. So quadruple that expense ratio. I think you got a good one there. I think it's really, really good. I looked at the holdings. It's a true index fund of the S&P 500. I think it's a great, great option. Just kind of depends on what you want, because the functionality of owning an index fund is going to be a little bit different than owning an ETF, right? An index fund is going to trade after hours, your dollar cost averaging. So you're not going to see those buys go in during the trading day. It's going to happen at the end. There was no minimum to buy in that index fund, which I thought was another really good positive. VOO also doesn't have a minimum to buy. So I think they're very, very comparable products. Wouldn't want to own both of them. Just one will satisfy. But I think they're both phenomenal. I think you striking up that conversation, I'm really appreciative, because I didn't know that. I stick primarily to Vanguard products when I'm recommending to folks. But I would absolutely recommend that as an option for an S&P 500 index fund. Very good option. I may take a position in it in my SEP IRA, actually. So I appreciate your offering that to the group. That's really what it's all about, sharing knowledge. It's really cool. I appreciate the heck out of it. I got to run, enjoy the rest. Take it easy, Scott. I'm going to run myself. I'm going to get down. I got obstinate one. I'm going to try to get to the bottom here if I can. The questions just keep piling up here. Some of the folks are starting to filter out of the group anyway, which is fine. I thank you for tuning in, for you guys that have stayed with me this long. An hour and a half is a little long, I think, but that's okay. I enjoy it. Every time I mention Sears, I'm doing it as a jester and a clown. Yeah, for sure. It's crazy. What the hell happened there? Jesus, that's embarrassing. I used to love going to Sears too, man, for all the tools. It was awesome. But I got Hector Mendoza. What a crazy weekend we had in the stock market. My losers down. Yeah, Ford, Facebook down 9%. You're good. My winner, pizza, I'm up 23%. Nice. That's awesome. Nice to see somebody actually made some money. I know the MJ stocks went up huge again this week. That's awesome. How long is a limit sell order good for? You can set it for either 1 day or 30 days on Merrill Edge. So 30 days is what they cap, and you kind of want to monitor those, you know. set it aggressively. But if you set it aggressively, you'll be surprised. Typically, they do meet those thresholds that you set, and it'll go ahead and execute. Let me kind of scroll down here, see if I've got all the major. I got Matt M. I think your video this week was so successful due to your message. Your message was logical and rational, and to be steadfast, stay the course of long-term success, and don't freak out. And I appreciate that. Yeah, I tried to give that other side of the coin as well, because that's honestly the way I think. That's honestly the way I felt, but I honestly think people need to hear that as well. There's enough YouTube channels out there, and I'm not going to name names. You guys can read between the lines as who I'm talking about, but I don't get it. I don't get the success. I don't understand. YouTube is making that individual rich, no doubt about it. It's actually unfortunate. It really is. I mean, if you're going to get wealthy, doing good things, man, pushing out good information. I mean, I guess there's no business like showbiz. And that's basically what it is, in my opinion. But thank you for that. I really appreciate that validation. That sincerity, I hope, does come through the message, certainly. Hi, Ryan, great job. I'm new to the channel and loving the wisdom. Question, what portion of your portfolio is in bonds? Forgive me if you mentioned this in previous vids. Cheers. Alphonse Mango, very well. Welcome to the channel. I do have 10% of my portfolio in bonds. It equals out to about $20,000 of my total overall invested capital. They are spread out over 6 ETFs, all of them issued by Vanguard. I have 2 long-term bond holdings, both of the corporate side and the treasury side. Those products are right off of the Vanguard website. I have 2 medium-term, and I have 1 short-term, I believe, and 1 total bond index. The ticker symbol is BND. But I do have 6 individual ETF bond holdings right now in my portfolio at about $20,000. So 10% of my portfolio is now. It's basically just a token position to start it, with the eventual buildup as I get older in life, to just have some exposure to each of the bond markets, long-term, medium-term, and short-term equities. That comes right out of Tony Robbins' book, where he recommends having a section of bond portfolio spread across those 3 different offerings. It really covers each of the segments of the market. And if you're diversified in stock and diversified across the rest of the market, there's really no segment that you're not covering. There's no guarantee of appreciation, mind you, but at least you're covering every segment of the market. Okay? So that really good question. I hope that helps you. Is an S&P 500 index, 0.3 fee. I pay nothing for in and out with Schwab. SWSSX follows the Russell. Very cool, Bob. Thank you for that. That's really cool. Jared Odell says JPM is a buy at 107. Hell yeah, it's a killer buy. Is it less than 10 times right now? That's stupid. Sometimes the market, man, it's fickle. It's crazy. I'm holding my shares. I'm good. I've got Ryan T. Calhoun on the line. How much of your portfolio should go into non-dividend payers? My top holding is Google, and I own Amazon, PayPal, and CRM. But other than that, every company I own has a yield. Your portfolio is very similar to mine. I own all of them. I do own Google. I don't own GOOG, which is the Class C offering from Google. But I do own the Class A shares, but I own the rest of the holdings except for PayPal. I think I sold PayPal. I did. But I do own CRM. I own a big position in CRM. I bought it right before they nosedived. So I think you're good with all those. I tend to not make rules hard and fast. You know, it's really whatever's in line with your risk tolerance. If you have the tolerance and, you know, if you're of an age to where you can invest in those stocks, you're all about it. Make sure you hold those long term, because those right there, those 4 stocks may end up making you rich someday. I mean, really. I would add Facebook to that group. I really would. I know people don't want to hear me say that. That's too bad. It absolutely is a premium offering, and it deserves to be in that group. It really does. It really does. Yeah, but those are all killer holdings. JPM had a good financial report. Ryan recommended a few weeks ago. I wasn't sure what happened, what the deal was. They must have picked out something that they didn't like. The stock suffered today. in an otherwise up market. So I haven't looked at the report. I don't know what happened. But I was disappointed. I saw financials were reporting today. I thought that was going to be the main driver, the stock market. It was encouraging to see the JP Morgan, come back, the financial sector come back a little bit, and the market perform the way that it did. So some relative strength there. That was nice. I bought it today and will never sell. Smart. Yeah, smart. JPM is one of those stocks that you can own forever. Absolutely. Jared doesn't know Jack compared to Ryan, Mr. Mathis. Yeah, right. And I don't know, man. Jared's, I owe him a lot, man. Very, very sharp. And that's the cool thing about investing is it doesn't really matter who has the most knowledge. I tend to gravitate toward experience. I really do. I like people with experience. You don't necessarily have to be the best technical analyst, because I've seen those folks come out with a really good pitch for a technical analysis and they end up being wrong. And I think somebody with some gumshoe and some live through in the stock market, along with a lot of other things that I respect in life. But I'm really a big proponent of experience. If you've had the opportunity to weather a few downturns in your life, man, those have come with some inherent benefits, and I have a lot of respect for people who have come through those. But Jared Odell specifically, man, I think people who are part of the Facebook group, there's a lot of people in there that offer a lot. And Jared just offers a great perspective. That's all, just like I think I do. We all kind of piece together different perspectives, and I think the members of the group are better for it. So pretty cool stuff. Check out the commercial called Charles Schwab TV commercial. Not again, just Google it. Nice. Thank you. I will do that. That's awesome. Thank you for that share. How about AT&T? Ryan, not Ryan. I like misspelled. Like, what percentage of your portfolio is SWPPX? Nice. Yeah, I mean, it'd be interesting to know. I mean, that's an index fund you could own exclusively. It really is. I prefer Verizon over AT&T. I own them both, actually. I think those are both premium players. AT&T being the biggest. Verizon's doing some fantastic things. So I own them both. I advocate for owning them both. Very good dividend payers. So I've got Lydia here. My only regret this week was I did not have a lot of cash. My portfolio was still small, but I'm going to start putting cash on the side right now and want to pay off my truck first. That's smart. Just focus on something else, man, to kind of build up segments of your life. No doubt about it. Life's going to throw every curveball it can at you. There's no perfect life. There's just life. And it'll do everything it can do to chip away at you. You just got to kind of fight, That's all you got to do is just fight back, work on those other aspects, man. So it's cool. And thanks for sticking with the group so long. It's very cool. Guys, I'm going to sign off tonight. Been going for a really long, nice, long, successful live feed. I do appreciate your guys' time. I still need to tag this and get it online. So I'll be up a little bit. I'm going to refresh my drink and go at it here. This is some of the behind the scene that you don't see. Lydia can attest to this. Some of the behind the scenes that a YouTube creator. But I'm passionate about it. I'm addicted to it. I really am. I'm addicted to helping folks. And as long as I keep getting the validation through the channel, channel's not going anywhere. I'm going to continue to push my message out there and continue to try to show people the light when it comes to investing, guys. So be well. Have a great weekend, and we will see you next week. Thank you so much for joining into the live feed this week, man. We will see you later. Take it easy.